On Business Incorporated today, African Development Bank approves €63 million loan to increase cereals and oilseed production in Kenya. InfraCredit and the French Development Agency AFD sign agreement to cooperate on public-private partnership projects in Nigeria. And South Africa seeks measures to fast-track spending by towns and cities. Hello and welcome to the program. I'm Will Ibong. We start off as always with market numbers from Africa, where sentiments were mostly mixed at intraday. Nigeria's NGX is in the green in a big way at intraday, over 2%. Looks like it wants to make up for losses in the week, while South Africa's index is down 0.34%. Egypt's equities markets remains closed, same as in Kenya. Now to the Middle East, where major equities were mixed also at intraday. The United Arab Emirates, the Abu Dhabi index is up 0.07%, same as Dubai, up 0.2%. Still within the region, Saudi Arabia and the Qatari exchanges, which are closed today, but were negative at the close of trade on Thursday, as both indexes lost 1.12 and 0.13% respectively. Now to Europe, the collapse of Italy's governing coalition is raising concerns across Europe. Could the political turmoil in Europe's third largest economy presage more upheaval elsewhere on the continent as record inflation and low growth bite into household budgets? Stephen Beardsley joins me from Berlin now. Stephen, what's so concerning about Italy's government's collapse?
Yeah, we saw Italian Prime Minister Mario Draghi tender his resignation after a coalition partner pulled out of a planned confidence vote. This is worrying for a couple of reasons. First of all, Mario Draghi is well known within and outside of Italy as someone who can bridge divides. He's still known in Europe as Super Mario for his efforts in 2012 to rescue the struggling euro currency. And outside of Italy, he was really seen as someone who could potentially usher in the kind of badly needed reforms that could put Italy in better economic position within the EU. So a lot of disappointment there that he is tendering his resignation. There's also some issue about how this is the reason the coalition partner pulled out. This is a party that needs to improve its standing before the upcoming elections, and in part it's relying on inflation politics. That is, it has been asking for more relief efforts for Italian citizens, including taking on more money through borrowing. So that signals that, of course, inflation is going to play a greater role in the months ahead.
So are we seeing similar political turmoil elsewhere in Europe?
Yeah, this is definitely not just limited to Italy. We are seeing this. We are seeing this in France, for example, with recent parliamentary elections, where Emmanuel Macron lost his ruling majority. The opposition took on inflation as a very serious topic, with voters obviously seeing price increases in areas such as food and energy. Before that, we saw with the French presidential election, Macron's opponent, Marine Le Pen, a populist candidate, coming actually quite close, while making inflation really her key topic, putting away some of the old populist issues that she had or topics that she'd really focused on in the past, and really turning to inflation because it was seen as a uniting topic for more grass-level voters. Here in Germany, these topics are being addressed more and more. You don't really see a threat to the current government. They inherited a lot of their problems, frankly, but there are old topics that are back on the table again when it comes to, for example, climate measures such as putting coal aside or getting rid of nuclear. These issues are back on the table once again, and that could play into political discussions and upcoming state elections in the months ahead.
So what can we expect from European markets today, seeing that the inflation is hot and other things are there?
We've seen at the start that European markets were inching up after something of a two-day rout. That following concerns, growing concerns over recession around the world, and of course that inflation data out of the U.S. All eyes still on the euro and whether it's going to remain around parity with the dollar or whether it's going to sink further in its exchange with the dollar. Right now, a lot of investors are looking ahead to next week and trying to imagine what's going to happen with the ECB, the European Central Bank, in terms of its interest rate hike. It's been signaling 25 basis points, so that could provide some relief in those exchange rates between the euro and the dollar. Otherwise, all eyes will still be on quarterly earnings reports to see where things are headed for companies.
Thanks, Stephen, for that update. We move over to UK, where business leaders are warning that recruitment issues are putting livelihoods at risk and damaging the economy, with 76% of firms looking for staff. Juliana joining in from London as the update. Hi, Juliana.
I will.
Juliana, earlier today, you and Laddie talked about recruitment problems in the UK reaching record highs. Now, Amazon plans to create more than 4,000 new permanent jobs in the UK this year. It seems like they might not find people to fill those positions.
Well, I don't think Amazon is going to have a problem of finding those positions. You're right. I was speaking to Laddie this morning about the warning from the British Chamber of Commerce, but that is for particular industries and high-skilled workers. So we're talking about manufacturing, production and hospitality. But yes, Amazon have got this great news. The $1.1 trillion company have announced that they are expanding their footprint in the United Kingdom by adding 4,000 workers to the job market. And that is going to bring their total to 75,000 staff in the UK. That means they are one of the top private sector employers, on par with companies such as John Lewis. There have been some concerns about the future of Amazon. Yes, it does sound like a strange thing to say, but it's true. In 2019, I believe they employed about 10,000 staff. It was ramped up in 2020 to about 25,000, but now they've reduced that, and that's because, of course, we know that since restrictions were lifted, lots of consumers are changing the way they shop. And because we are going through a cost of living crisis, a lot of people are keeping their money firmly in their wallet, not spending as much online. But Amazon have made this announcement. They are keen on ramping up their expansion here in the UK. They also announced a couple of months ago that they're going to be expanding their Amazon Fresh shops, which means you can go in without any money into these stores and buy whatever you like if you have an Amazon Prime account. So yes, we've got 1.3 million jobs on vacancy in the UK at the moment, but I can bet you that none of them are for Amazon.
Oh, that's interesting development. Amazon there, walking to a shop without money, just having a card there. I would like to, experience that, Juliana. Now, we also see that the Saudi government has become a major shareholder in luxury sports car maker Aston Martin. What's going on there?
Yeah, this is a really interesting story, and it's piqued the interest of Aston Martin's investors, because their shares were up by 25% as soon as they made that announcement. They've had a pretty tough couple of months. We know that luxury cars were not really selling during the pandemic, and Aston Martin is a much-loved brand because, of course, it is most famously linked to the James Bond franchise. They announced that they were doing a fundraising of over £625 million, and the Saudis, under their sovereign investment fund, have put a bid in, making them the second largest investor in Aston Martin. Lots of people in Britain will be familiar with the Saudi investment fund. I believe they took over Newcastle, didn't they, pretty controversially from Mike Ashley. They've also got lots of investment into Formula One, and I think that's one of the reasons why they've attracted the interest of Aston Martin, because they are trying to get into the electric car brand, and they're trying to diversify. So they've put out this bid. The Saudis have said yes, they are going to take it. I think they put an initial investment of about £75 million, and as I said, it seems to have piqued the interest of investors because their shares are up 25% on the FTSE 250.
Interesting, Juliana. Really interesting developments there. So what are the markets saying?
Not great. The FTSE All-Share seems to be going into the weekend in the red. It's down 0.10%. However, the FTSE 100 is up by 0.91%. The FTSE 250, that domestic market, has been lifted by the Saudi investment into Aston Martin. Their shares are up 0.91%. In the currencies market, the British pound is currently trading down against the US dollar by 0.05%, down 2 on the euro by 0.33%, and at intraday, down on the Japanese yen by 0.22%. Well,
thanks so much, Juliana. It's always good to catch up with you, and thank God it's Friday.
Yes, I can say the same thing.
So now Hong Kong's Hang Seng Index fell 2% as tech stocks dropped and mainland China markets fell more than 1% after the country's GDP missed expectations. The Hang Seng Index in Hong Kong declined 2.29% in the final hour of trade, and the Hong Kong Tech Index slipped 3.17%. Alibaba's US-listed shares dropped more than 4% overnight after a theft investigation. The tech giant's shares in Hong Kong fell 5.8% in late trading. Index heavyweight Tencent and Meituan fell 2.1% and 1.48% respectively. Mainland China markets dropped. The Shanghai Composite was down 1.64% to close at 3,228.06 points, while the Shenzhen Component declined 1.52%. The second quarter report is China's weakest GDP print since the first quarter of 2020, when the COVID pandemic first hit. In Australia, the S&P ASX 200 dropped 0.68% to close. South Korea's Kospi struggled for direction and closed 0.37% higher, while the Kosdaq lost 0.48%. Japan's Nikkei 225 was 0.54% higher at the close of business. Now, U.S. stock futures were little changed early on Friday after the Dow Jones Industrial Average declined following a disappointing start to second quarter earnings from the country's largest banks. More major bank results are expected Friday, that's today, from Wells Fargo and Citigroup. Dow Jones Industrial Average, S&P 500 and Nasdaq 100 futures were all in positive territory. Now let's check out the summary of yesterday's trading activity with Maria Bird.
Market took a little bit of a hit on Thursday as two of the three major U.S. stock indexes were down. The Dow Jones closed at 0.46% down. The S&P 500 closed at 0.29% down. And the Nasdaq just slightly up at 0.03% up. It is clear that many investors are watching to see what the earning reports are coming out to say, and that is speculating that we could go into a slight recession. Not as bad as what we've seen in decades before, but one that will impact the economy. This is all due to the fact that we still see consumers purchasing despite inflation not being able to be controlled. The chairman of the Federal Reserve Bank is stating that he will likely have to increase interest rates again before the fourth quarter. This is also bringing concern to the real estate market in the U.S., as many are encouraging those who are looking to buy homes to buy now, because at the beginning of the fourth quarter, we could see an inflation in interest rates, which will potentially bring down the real estate marketplace. Many investors are looking to see what will be next for the U.S. economy, despite the fact that the economic outlook is not as strong as many would hope.
Thanks, Maria. Oil prices rose early in trade on Friday amid prospects of a less aggressive U.S. rate hike, although worries about a recovery in demand capped the gains. Brent crude futures for September delivery rose 1.3% to $100.35 a barrel, while WTI crude rose 0.9% to $96.68 a barrel. The U.S. rate hike uncertainty and weak economic data pushed both oil contracts to lows on Thursday, which were below the close on February the 23rd, the day before Russia invaded Ukraine in what Moscow calls a special military operation. Still, both Brent and WTI had clawed back nearly all losses by the end of the trading session. However, concerns about the outlook for demand continued to keep a lead on oil prices. Now, gold inched higher in early trade on Friday on fears of aggressive U.S. interest rate hikes weighing on demand for bullion and set prices for a fifth straight weekly loss. Spot gold was up 0.2% at $1,713.04 per ounce, but has lost 1.6% so far this week. U.S. gold futures rose 0.4% to $1,712.10 per ounce. Spot silver dipped 0.1% to $18.36 per ounce, but has fallen about 4.9% in what could be its seventh straight weekly loss. Platinum gained 0.5%. It has dropped about 5.5% this week, the most in 3 months. Palladium rose 0.8% to $1,911.45, but lost about 12.4% this week, the most since last November. Next, a look at Ghana's hot inflation data, and that's right after the break. Welcome back. Consumer inflation in Ghana accelerated to 29.8% annually in June from 27.6% in May. That's official data showed on Wednesday. This shattered another record while the West African nation continues to talk to the International Monetary Fund, that's the IMF, for support. Joining me to unpack the economic implications of this is Matt Kiniga, Practice Lead, Sub-Saharan Africa Frontier View. Good afternoon, Mark. Good to see you.
Hi, good afternoon. Good to see you as well.
Now, so why have economic conditions deteriorated so rapidly in Ghana?
Yes, certainly. So starting with inflation, as you mentioned, so inflation has reached, by some calculations, a 19-year high, so around about 30% by the last reading, according to the last reading in June. And this is far above the relatively low inflation rates that the country was enjoying during the pandemic, actually. So inflation rates of below 10%, which was very conducive to consumer sentiment, at least in the economy. Now, the economy has seen inflation rise significantly for a number of reasons. One is that the cedi, the currency, has been under considerable pressure over the last couple of months. The currency has lost about 33% of its value against the dollar since the beginning of the year. This has been driven by, firstly, a series of credit rating downgrades by sovereign credit rating agencies over the last couple of months. This has resulted in an outflow of capital from the market. But we've also seen the country's trade balance deteriorate as the cost of imported commodities such as fuel, oil, and agriculture commodities has increased significantly. So the trade balance has weakened very significantly, and this has driven down the currency. So a number of reasons there. We've also seen the government's public finances also deteriorate. We are now expecting quite significant government spending cuts over the next 12 months or so. And this is really because government revenues have undershot expectations. By some estimations, they were around about 25% below what the government was expecting at the beginning of this year during the first quarter. So a number of factors coming together to make the outlook for Ghana look slightly less optimistic.
Well, I know the Ghanaian government did say they were not going to turn to the IMF or, international financial institutions for help. But what does the IMF deal mean for the country's growth outlook now that they've made a turnaround or a backtrack?
Yes, for sure. Yeah. So I think that this reflects the fact that the government doesn't really have much of a choice in the short term, at least. It really needs the support that an IMF deal will provide. So what we are seeing is the government facing the reality of its fiscal position. And therefore, it's relatively positive, because what it does suggest is that the government is actually taking its fiscal challenges, its fiscal problems quite seriously, and it's confronting these issues, and it's willing to proceed with some of the painful measures that an IMF deal would be associated with in order to stabilize public finances. So we could actually see a bit of a stabilization of the currency as a result. So we could see an improvement in investor sentiment, at least in the short term, because if they see that the government is turning to the IMF, there will be less risk of a very severe adjustment to public finances. We were expecting to see the government cut spending anyway this year, but with an IMF deal, it will be a much softer landing for the economy, and it will be a much more easily managed process for the Ghanaian economy. So certainly, we don't expect Ghana to be out of the clear anytime soon, but certainly an IMF deal would soften the impact of the current fiscal problems and inflation that the country is seeing.
Oh, we did know that Ghanaians took up placards recently, asking for a change in the economy and in government. But which sectors of the economy are still performing well, regardless of what they're going through, the woes they're going through right now?
Certainly. So it's always worth remembering that the economy is still going to grow this year. We're still forecasting growth despite the economic challenges. So we're forecasting growth of about 3% this year. This is a downward revision from our previous forecasts, but it still is growth. And there are sectors of the economy that are still doing relatively well, actually. So the IT and telecoms industry, a real champion of growth in Ghana. It's very well developed. It's growing very rapidly. It's quite well positioned to support the economy at the moment. We're also seeing investments into manufacturing, for example, automotive assembly, The education and the healthcare industries are also outperforming headline growth. And this is partly because of a very deep slump that they endured during COVID, but also because the government is prioritizing expenditure on healthcare and education, especially healthcare infrastructure investment, so hospital construction, for example. So despite weak public finances, despite weaker economic growth, there certainly are industries that will continue to generate opportunities for companies and will continue to support the economy over the next year or so.
Thanks, Matt Kinniger, Practice Lead Sub-Saharan Africa Frontier View, for sharing your insights on the program.
Thanks, my pleasure.
Now, the African Development Bank, that's the AFDB, has approved a €63 million loan to Kenya to significantly boost cereals and oilseeds production by over 1.5 million metric tons over the next 2 years. The production increase will help bolster national food security and economic resilience. The loan is part of the African Development Bank's $1.5 billion African Emergency Food Production Facility, an Africa-wide initiative to avert a looming food crisis exacerbated by the war in Ukraine. The project entails the delivery of certified seeds, fertilizers, and agricultural extensions to 650,000 farmers to boost productivity. Now, InfraCredit, a specialized infrastructure credit guarantee institution in Nigeria, and the Agence Française de Développement, AFD, have signed a €600 million technical assistance financing agreement. The Chief Executive Officer of InfraCredit, Chinua Azubike, says the AFD's technical assistance funding will enable state governments adopt new funding tools and public-private partnership models that will attract and retain private sector's financial incentive to invest in viable infrastructure projects. On his part, AFD's country's director in Nigeria, Javier Moran, says that the €600 million grant to InfraCredit will finance studies and technical assistance for future infrastructure projects while aiming to further mobilize the private sector in infrastructure projects. South Africa says it is seeking measures to accelerate spending by its towns and cities that are struggling to provide basic services such as water and electricity. According to the country's finance minister, the government may allow municipalities to allocate infrastructure spending so that they can use all the allocated funds for 3 years. In the first 12 months, cities and towns spend less on things like roads, water, sewer, and electricity, and governments have disrupted the provision of services in areas already struggling to provide necessities, leading to violent protests. South Africa has suffered its worst turmoil since the fall of apartheid in July, partly due to a lack of services. Now, meanwhile, South Africa's struggling power utility Eskom may need to raise 45 billion rand of debt this year to refinance upcoming obligations, purchase diesel, and pay inflation-beaten salaries to workers, according to S&P Global Ratings. The rating company said it expects Eskom to require additional financial support of 150 billion rand, which is not factored into its debt forecast due to the uncertain timing and form of support. The country has had to endure hours of outages in the past few weeks as labor strife and breakdowns at coal-fired plants forced Eskom to resort to rolling blackouts, which cost the economy billions of rands. Still in South Africa, South Africa's mining sector struggled to recover in the month of May 2022, firmly remaining on a contractionary trajectory, with data from Statistics South Africa showing that mining production shrank by 7.8% year-on-year, following a downwardly revised 14.8% slump in April. Statistics South Africa said production was driven lower by decreases in gold, which fell 28.3%, coal, manganese ore, iron ore, and diamonds. On the positive side, the country produced more platinum gold group metals, nickel, copper, and chromium ore. The sluggish performance by the sector does not bode well for the country's gross domestic products in the second quarter, after a promising start to the year, with the sector having been a key contributor to the economy amid the recent revenue windfalls. And that's it on the program. Thanks for watching. I'm Willie Bung. See you next time.